was a time we were going to Kigali in a group and colleague approached someone, are you also going to the same place? The response the person gave, that day I thank God I'm an introvert because the attitude the guy showed was so disgusting. Right. So Africa and Ghana, West Africa, Ghana, let's learn some of these things. All right. So we are ending this session very, very soon, like very soon. And I want to treat a very important topic today. And I'll urge you to please observe. Don't let anything to distract you. Observe and don't let anything to distract you. When you are able to understand this aspect of it and implement it, you will definitely solve majority of your problems. So things that will make you lose money trading. Am I audible enough, please?
Yes, sir, very audio, very good.
Thank you. We have crypto class tomorrow. So I will urge all of you to show up.
Also, a very good touch now.
We are going to do very interesting, it's kind of funny topic. I'm going to talk about how to hold and protect your cryptocurrencies. And in that same topic, you'll be learning about wallets. We'll talk about cold wallets, hard wallets. We'll talk about seed phrases and many more. Right. So a lot of people are in crypto now and they don't know what is crypto wallets. Once the money is on exchange, they feel they are holding their crypto. You are not holding your crypto. So don't miss tomorrow's session. Honestly, everybody and invite someone come and learn uh, about crypto into detail. Now, I'm coming to talk about a topic, major topic, zoning, okay? Or trading in the zone, the zone. Or let me see, or you can say zone trading, zoning, trading in the zone, zone trading. Now, when it comes to trading, a lot of things happen from movement of currency from one point to another, a country's economic activities against the other, GDP growth, and many more, demand and supply to one currency pair against the other. And you are not always online to be watching those news or fundamental data. And the question is, those news, do they work? That's the question. You ask yourself, do they work? And you'll be wondering if yes or no. And if you're a trader, you will hear something about non-farm payroll, and they'll say Powell is coming to speak, unemployment claims, and the rest. These are dated events that have some advantages or influence on the market. Aside those dated events, there is also something about speculation and sentiments. Then we have technical analysis. Now, technical analysis is all these things embedded in the chart. But the question is, what is the psychological effects on currency A going through sentiment at the same time there's speculation, at the same time fundamental data? How will the reaction be on possibly? Now, we know about candlestick, and candlestick contribute to tell us what every other person is thinking about the market, the decisions they are making about the market, and it's like everything that surrounds it at the end of the day, right? So one way people use technical analysis to project decisions in the market and the rest is support and resistance. So identifying support areas and resistance areas. Now, if we look at it very carefully on the chart here, you see that price moved, created something here, created something here, create something here, create something here. Let's see. Then we also have price created something here, something here, something here, something here, and this one. The next one is not yet created. So if a trader wants to make a decision with all this, he will definitely connect these lines, right? Will definitely link this line. So let's say you are in the classroom and you are reading plotting or scatter diagram. You actually draw the line to get best fit. So that best fit, we also connect this one, we also connect this one, and we also connect. Which of them is the best fit? And what data is it releasing or giving to you? That's the question. Now, based on how you connect it, will tell you the interpretation and the possible projection of the market. Where you come to trend lines, giving you channels, or using equidistance lines, draw channels. And there are logics, there are reasons behind them. They are not just drawn on artistic level. No, it's about arts. Then everybody, those who know how to draw very well, should be winning big in the market. So that is one of the things we are coming to look at. Now, the question is that which of this will you use? Will you use this one, or you will use this one, or this as a resistance? That is the question. So I will use the three, not only one, as a resistance. So I'm going to pick my horizontal ray to put it here. Then I'm going to pick again and put it here. Now, the previous high here became the opening and closing price. The closing price for the bullish, and then the opening price for the current bearish Mariposa candlestick. Now, when you go to the smaller time frames, like 1 minute, 5 minutes, 15 minutes, a lot of things happen here. Some people will see bearish engulfing candlestick. One of the time frames will give you bearish engulfing candlestick. The one will confirm it, or you are going to get a hammer. an inverted hammer, sorry. Or probably you get a, let's say a piercing line, or you probably saw a small candlestick pattern formed, maybe an inverse head and shoulder pattern, or a W pattern, or a head and shoulder pattern, if it is happening at the base. So one thing you should take note of is that there is no magic of price reversing or going towards a certain direction. So for you to understand what price is doing from one point to another, you consider the wick to the previous opening or closing to the body of the candlestick. So this is the wick. This is the closing and opening of a new candlestick. And then it continues straight forward. So you consider that. Then the other one. These ones become a zone. Okay. I did not add any name yet. I'll come to the name. So let me clean this. Now, over here, price touched there, 21.85. Price get there, then pull back, and then there's a new candlestick opened. And the market now creates a high, a new high, which is higher than this high. Now, I said this is a zone. We did not clarify what type of zone is it. But then, what market did here was price was rejected. What market did again was price was also rejected. So we have resistance zone. There is some kind of resisting of price in that area. Okay, what then should we expect next? Now, this market's been going up, 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 up. Now, picking it from here, there are some things that you didn't see that you are seeing currently. For instance, over here, we saw the same rejection candle, but the sell candle could not close on the baseline here. There is still a rejection telling you that buyers are still in charge. They are still taking control of the market. But when you look at this, the rejection candle here remain valid, and the next bearish candle is big and complete without a wick. And the current one forming, which will complete in 50 minutes, you can also see that it is going down with some level of momentum or impulsive. You are a seller. Should you jump in? Technically, no. Fundamentally, no. Only if you've seen a reason on maybe a step down time frame for you make this decision. But if you're also looking at an evidence on a step down time frame, you'd have already been in this trade running in your favor. And it's also going to be based on your target, the target you have, right? So we draw zones by connecting the previous high to the previous low, the previous opening and closing of the previous candlesticks. That is why we have this zone. We can do it for the base as well. And the base becomes a support zone, right? Now I'll try to explain in a way that you get the whole concept clearly. So if you want to trade, okay, we have something you need to have a setup, right? So either this area or this area or this area or even here or here. Price will definitely get to any of these areas. What do you need to do as a trader? Wait patiently for price to push back into any of these areas. 1, 2, 3. But should not be higher than the previous high. Let it give you rejection candlestick of market turning or changing direction and get a confluence to that effect. Then you can now sell that angle technically. What I'm just trying to say is that for you to be a good trader, mitigate risk and manage your risk very well, this market will definitely pull back and get here. It can pull back and get here. Now, when it pull back, let's say we are drawing it. So it got here, it's from here, it gets here and come here, and we are expecting it to be a pullback. There is going to be a pattern you should be thinking about. Once the market start doing that, there should be a pattern you should be thinking about. You should be that thinking about an M pattern. But currently, this formation cannot give you an M pattern, but it can be an extended M pattern. So if it's going to be an extended M pattern, you'll be expecting price to touch 2180 or 2185 or continuing to sell. If it is going to be a double top, that means that we are going to expect price to come back either same level or closer to 2195. But the interesting thing is that when price comes closer and touches the zone or a little bit in the zone, it gives you validation, proper validation on the movement of price. So to me, all my trading approach, I love zone and I I use it in many ways as always, right? Because it works for me. It also helps me to reduce risk, know where to put my stop loss and the rest. Okay. So what next? For you to analyze this market, what you need to do is to maybe you have just seen this trade coming down this way. Patiently wait for a pullback, get a confirmation of that pullback, then rally to the downside. So what again it means is that anything you are going to do as far as making a decision on a sell order will be in concern, you shouldn't put your stop loss within this zone. Your stop loss shouldn't be within 2195 and 2185. That 10 pips. Your stop loss shouldn't be there. Where should your stop loss be? Your stop loss should be a little bit above with a good buffer outside the zone. And then you're expecting price to get to probably this area. And this setup is giving you 2.26 bricks to reward ratio. So 2R setup. So now, if you are maintaining this same 2R setup, and then you are maintaining a sell, and then you decided that you are entering the trade on this candlestick, and then you are chasing the same target, and then your stop loss is at the same level, the same setup is giving you 0.7R. So it means that you may end up holding this trade for market to pull back before now going into your favor if the reversal pattern is assured. So a layer of high risk traders will already be in this trade. The moderate, medium, they will now be looking for a pullback to enter the sell. Then the least, which are the zero risk traders, they will wait for another pullback, especially when price break this area. They wait for another pullback, then they look for their sell. We call them the low risk traders. Now, we've already talked about Fibonacci tool, right, recently. So if you are using Fibonacci tool to trade, to confirm, it means that you are actually putting the Fibonacci on this number, where it started from. Let's assume we are expecting market to end here, the trend to end here, it means that we'll be expecting market to go to at least 2185 or a little bit below 2181 before we enter. So you can be, even without price creating the end of the trend, you can also get retracement coming in just for you to get a validation point and allow the trade to run. Now, the same thing can be done for the next move. So if this move is what you are looking for, and then you are expecting a pullback, or the trend is already somewhere here, and then you are expecting that when price gets to the zone, I want you to pull back and let me get my sell opportunity, you can still take the Fibonacci tool and put it on the trend and pull it down to this area and wait patiently for price to react. Now, based on the drawing I have done, it's telling you that the probability of you getting the fib level at 21.85 is equivalent to 0.685 or 68.5. Then the current trend is telling you that the probability of you getting price to bounce back to this area is 0.5 or 50.0. Then it starts continuing like that. Now, it also means that the market is giving you something, a rule we call, so we have a new high created, right? Then we are expecting a new high to be created, which should be lower than the previous high. So, like I said, high risk traders somehow are already in this trade. Moderate traders will be waiting for a new high should be created, but should not be higher than the previous high. Then it should also create a low than the previous low. What are the lows? 1, 2. So for many traders, they will definitely wait for price to even break this structure completely and then push back to any of the levels for they enter for the next sell. So it means that they are expecting as market create this high, there is a new low. The question that is the low lower than the previous low? Maybe no. Then what of the new high? Is the high lower than the previous high? Yes. Okay. Let's wait for it to create another low. And this time around, we are going to expect the low should be lower than the previous major low. And it creates a new high, which is lower than the previous high. Then you can now say the market is now going towards a downward trend. Bearish, going downside. Are you following so far? Yes, no, in the chat box. Are you following so far? Great, too. Now, when you do this down, it means that you have a setup. And now that you have that setup, based on the formation of the setup and the Fibonacci level, the trade is going. Maybe you are using Elliott wave theory, or you're using break and retest, or break and test. Based on how that system you draw projected is going, will also even tell you how your trend line will work. When you now focus how your trend line will work, you can now have a confluence to effect of the trend line, and then price will now go towards the trend line, and to price finally break the trend line, and market give you a new pattern, and then change direction against you. So if you're able to spot it from the onset the right way, you should also be able to know the mechanism market will use for a reversal. Now, the drawing, I always say, the drawing always looks sensible, very beautiful. When you come to the chart, it's a different thing, right? But then I want you to absorb this information that we are going to what? Push it up. Another thing you should take into consideration is this. There is always destination. Full stop. There is always a destination. Okay. So this market moved and gets here. Ask yourself, Why is it reversing here? There is a destination. Where is the destination? I'm going to show you the destination. This is the destination. Why is that area a destination? There was a reaction price over here. So when you are trading and you want to understand how the market is moving, look at the destination areas. And those destination areas are called levels. How intensified those levels are will either make it a key level or a point of interest. Then the approach candlestick uses to come will integrate the ability of ICT traders, making it imbalance, mitigation area, and the rest. Then, how price reacts to the zone or the resistance or the support will actually tell you if that area becomes a demand or a supply based on the direction of the market. Then you can be able to make an informed decision going for a bullish expectation or a bearish expectation. And anytime a zone reacted, price reacted to a zone and converted from maybe an ordinary zone or a support zone to a demand zone, there is always that ability and reason to see a high momentum in movement of price. Now, when you go on the internet, you can go and look for demand and supply in trading. You'll read around it a little. Might be confused. You're asking yourself, is there a magic for identify demand and supply? Is there anything special identifying demand and supply? I've been there. So the best way I solved my problem is to observe carefully what are the most important things I need to understand on price. And I got to realize that to me, it has to be zone. So when the market moved, it moved from one zone to another zone. In between the zone is a center point. In between the trend is the center point. In between the channel is a central point. In between the current zone is a central point. Those points act as something we call control line. They help you understand the way market is going to move from one point to another. And it can help you project the center point. Wait. So try to understand these things, and then things will be cool with you at the end of the day, as far as trading is in concern, right? So let's take it from that angle and we'll go into examples and there. So we also have something we call on our side trading in the box or in the rectangle, because you can use this strategy to map out the previous high and the previous low, divide it into two, and be able to forecast where market will be going next. So that example is very simple. You pick price from here, then push it to this area, and then divide this into two. Okay? Then you divide this into two. You'll be seeing this area, price moving around this area as the center. And then you can use that decision. Anytime price is getting to that area, and make a decision on that area to get your entry or exit. You can also get a confirmation to know if as the market is moving, if there will be a break, if market will pause, if there will be a rally, and why the market stop, and what to expect next. Now, these things are mostly going to be identified based on how you are observant to price movement as well. Now, let's take Euro USD. And let's look for that thing again. Now, this is Euro USD. Let me get it to 4H time frame. Okay. So what you should do, very simple, is that you can now, I will now use the rectangle because I now show you how to spot it. So this whole area is going to be considered as a zone. Because will you consider this side? We're going to consider the top, right? Then beneath it, for instance, here, just this tiny place is also a zone. So currently, this movement here from this point to this point is also considered as a zone because reactions happen there. Okay. Now we take this same 4 hour to let's say 15-minute time frame. Within that zone, a lot of things happen. When you are looking on a 15-minute time frame, this is where you are going to spot your zone. So sometimes you don't be surprised when people understand trading in different angles because the way you observe it is different. What will determine the result is how much you are making. Are you losing? Are you gaining? Are you hitting stop loss and the rest? So over here, this whole being the zone on the 15-minute time frame, but on the 5-minute time frame, this area becomes a supply. And when the supply happens, there is a rally to the downside. Maybe you might not understand all right now. Okay. Now, when you come to the base here, there is also another zone you can spot here. Okay, so we also have what we call primary zone and secondary zone. They all have a role they play in price movement, when and how price got there, and the rest. So your assignment will be very simple. Go to your trading or analysis platform and just try to spot zones on 4 hour time frame. Okay. Now use previous historical data or use historical data and current data to spot it, focusing on the week of the candlestick. All right. So for instance, when we are looking at this area, we'll see price got here. Then we can also see that the same thing here, price is here. Okay. So the zone is very trim from here to here. It doesn't matter how big is it. A zone is a zone. And then there was a reaction here many times, but not at the same level, like not at the same price. Okay. Then we come to the top two. We have a zone formed here. Now, when you now take this same smaller rectangle to a 15H time frame, for example, this is how you can interpret it. This is how you can interpret it. So price came within the zone, price got here, then price hang on it a little. And then we can consider this one, validating from here to here, we can consider this one as the demand and the pump will come. Now, it also means that if you are able to identify demands and supplies very well in trading, you will always be a winner in the market. If you also understand zones very well, and let's say you are using this trade for instance, it means that you can easily get a good setup like this, then with a good high risk to reward ratio at the end of the day. It also means that your stop losses will always be very small, then your wins will always be what? Very big. You come to this area here, this is the zone. Here, these are the zone. And if you look at it very well, the zone was fresh, and then the demand, the supply rallies to the downside super fast. Before then, this was the zone. And when you know how to spot zone, you are going to value some candlestick patterns like Harami candlestick patterns engulfing candlestick patterns, and maybe dojis, and then hammer candlestick patterns. They will become your companion at the same time, and you can use them to make some good movements and decisions or sell. So, if you have any question, please you raise your hand, and then we talk about it quickly. Then we call it a night. Is there any question? You raise your hand and I'll call you. Or you type in a chat box. Okay, Edwin,
Yeah, good evening, Doc.
good evening.
Yeah, thank you very much once again for your teachings. My one is on the copy trading. I observed some things on the copy trading, but I don't know whether my colleagues are also aware of it. Is I think the percentage share when you copy a trader. I don't know whether they are aware. I've seen some 30%, but I'm not clear whether as to maybe probably if I copy a trader in a day or in a week, I make about maybe 100% of the amount that my deposit. And in
Can we
withdrawing,
transfer this question to the copy trading session? I think it will be held on Monday. And
okay,
is it okay, please?
okay, okay, okay.
Are you on the copy trading platform?
Yeah, I'm there, I'm there, I'm there.
So let's transfer it to that time.
They will have a Zoom meeting for
We
copy
always get
traders.
we always do update calls, so I think you can wait for.
Okay, okay, okay. And also, I registered with the copy the what is it? This application, Purpose. But you see, when I try logging with my details on the uh, what is it? This trade account, I'm finding difficulty. Although I have my details, but when I try logging, it doesn't show the C trader my details on the copy trader. My C trader details doesn't show. It only show the top FS details, but it
Where
doesn't
were
show
you?
the
Where were you when we did the platform education? Did you join the class when we did platform
no, no, no,
education? Okay,
no,
you can
please.
go to YouTube and you just
I can
search
go.
for. You can go to YouTube and watch because we have a platform education video. Most of you who joined the class from the onset, we've done all those things. So you can go to YouTube and watch it.
Okay.
But then we organize platform education once a while. So you can actually stay tuned for the next session for platform, trading platforms and how to navigate them.
Thanks very much.
Okay, welcome. Any other, please? Is the zone drawn only on 4H time frame? No, you can draw zone on any other time frame. But the point is that uh, according to the best approach to trading, the smaller time frame has too many noise and unstable information. So it's always best to spot your levels, your key levels, your reaction points on a bigger time frame, and 4 hour is actually recommended. Then you can use those reaction points to determine the direction on 4H or 1 hour time frame. Probably get your entry on 1 hour time frame, or you get your entry on 30 minutes or 50 minutes. And one thing you should always do is that when it comes to time frames, there's always two-step up and two-step down, right? So that is it. Swanky, you can unmute your mic, please.
Hello, good evening.
Yes, evening.
Um, I think it's good that we're touching on this particular side.
Can you please speak up a little?
Can you hear me now?
Yes.
I'm saying today, I think it's my life that we are treating on this topic today. So today I was on TradingView. I've bought the first like their subscription for a month. So I was doing a back test on it. I did it for Euro JPY and I was doing for GBP USD. But I could see that when I'm doing the back test on the Euro GPY, it was a bit easy to know where the market is moving and how it's moving. You can mark your support and resistance and all that. But when I moved on the GBP USD, I could see that when it's even trying to mark it out, it's a bit different and it's always trying to go against me. So I was wondering that is it that every market has its own way of moving, depending the coach and the host, or is it that they all have the same similarities when they are moving?
Okay. You see, you started by saying you bought a course and you want to back test.
Not the course,
So,
I mean I've subscribed for a month.
okay, you made a subscription
Yeah,
and you want to back test, right?
yeah.
So when you are back testing, the the rules that govern the source of your subscription and um the trading style is what you are being taught, right? That's number one. So that will reflect in everything you do. For instance, I had a combination of four mentors
Okay,
to summarize for you people here. One of my mentor, he doesn't believe in trend line. One of my mentor believes and uses trend line a lot. Okay. One of the mentors doesn't believe in patterns. One of the mentors believe in pattern. Now I sat down and I look at all of this and see which of them works well. And I pick the one. So mentor A, I pick what work. Mentor B, I pick what work. Mentor C, I pick what work. Mentor D, I pick what work. I put it together. Now, when you come to currency pair movement, for instance, let me show you guys quickly the real data available. Now, there was some NFP uh, fundamental data, and this is the distance euro moved. Okay, then this is the distance GBP USD move. But look at the distance for gold. Same news, same time. The US dollar is the main target. The move happened and gold top up. Okay, the move happened, gold top up. Let's check for all USD, Australian dollar, US dollar. So ideally, you ask yourself, what is all this about? This is how Australian dollar move. But after gold USD did this, the market pumped up on top, create a new high again before dropping. So if you now come with the mindset of Euro USD or the mindset of odd USD to come and use to trade gold, you will lose money. I don't know if it makes sense. Wait, it should make sense actually. So currency pairs move differently. For instance, economic activities happening in Britain is not going to be the same as Canada. So if you are trading Canadian dollar against Great British pounds and you are trading United States dollar against Canadian dollar, the movement will never be the same. They have to be. Even though we have something we call correlation. The correlation effect also. Swanky, are you cool? Pearls. I know we have two pearls here, or two human beings in one called pearl. Please, if we draw zone on 1 hour time frame and zone on daily time frame, which one do we use? Oh, good question. I don't have enough time like I would have explained it better. But what happened is that the best way to do it is that we sometimes start from bigger time frame. Okay. We map it out, previous high and previous low. Because you need to, each and every day, you want to go into the market, you check previous high, previous low. Then you add your buffer. After you add your buffer, you set for liquidity, where there will be a liquidity sweep. Look for them, right? After you look for them, you now zone. You use the daily time frame for just the outlook and then the market structure. You come and use the 4H time frame for um, direction of the market. And you're finding your entry on 1 hour or 15-minute time frame, probably. Now, one way all these things work is your style of trading, kind of trader you are. You are, um, are you a scalper? Are you a day trader? Or you are a swing trader, right? You figure out all these to make your decision. But once you spot the zone right on a bigger time frame, you cut across the smaller time frame. And you can use this to make decisions more time, right? That's for Pearl. As a beginner, what is the recommended number of currency pairs to trade? I said it before. Do not focus on more than 5. I focus on only one. But then I have about 16 people in my inner circle, and they all have one asset each. So I still need to master it for them, help them understand. So as a beginner, pick one asset, one currency pair, understand it very well. After you finish, you are done getting the concept about how it moves and everything. What do you need to do? Go read on correlation. Okay? Correlation positively, correlation negatively. When that particular asset is buying, which other currency pairs buy with it? When that asset is selling, which currency pairs sell with it or buy against it? That's correlation. So you study one, you can then use correlation so that you don't struggle watching over 600 assets and you are here and then you miss it here, you are there, you miss it here, and the rest. So that is my humble suggestion to beginner. I want to take trading to the next. Okay, that was the last question from the chat. Do you have any question? If no, then we will call it a night. I wish you all a happy Friday. Government workers or 9 to 5 people will say, thank God it's Friday because they are stressed. And we traders, we do reflection Fridays. One reflection will be, what is the next move for XAU USD? Then how many stop losses did the move hit me? I got a few stop losses within this move from last 2 weeks, last week or so, yeah. So the peaks I want to pick, will it keep going up? What do I need to see? What going up and the rest? These are things that we do on weekend. We plot our graphs, our analysis down, and expect market to respect them for us. So what are the main elements in a trading plan? I talked about trading plan already, but your purpose should be there. The reason why you are trading. what you want to achieve, your equity you want to start trading with, your entry rules, your exit strategy. Are they permanent? Are they flexible? Or static? Then how you want to grow. Are you growing exponentially? Or you are growing with a simple interest? All these are things you need to do. The trading time. What asset do you want to trade? What time do you want to trade? How many hours do you want to trade in a week, in a day? And how many times do you want to trade? I have a friend who trade only GBP, JPY, or just sometimes Japanese pairs. He trade only on Wednesdays, and he trade 3 hours on Wednesday once a week, and he always makes his money. So because he has a plan. So that's what goes into developing trading. Okay, so until then, we'll be having our last session on Monday. We'll be having our last session on Monday. So we can start March edition. And you have access to all the recordings on our YouTube platform. And go there, subscribe, and then watch other relevant videos. Our videos are for educational purpose, not marketing purpose. Do have a good evening. I'll see you again on Monday, same time.